Guys, the market's been pulling back hard, and that's where the great opportunities really show up. So I've got 12 solid companies, many that are going to double over the next year, I'm pretty certain. And as soon as this government shutdown is behind us, and it will be, then these are going to start to take off again. But I'm going to break down all of these companies now in this video, the catalyst that's going to drive them higher, where they are now and where they are going to be a few months from now. And we will go ahead and cover the trades that I've got on the platform, the trading platform. So you'll see what I've got on and what I'm placing. So be sure and like and subscribe, and we'll jump into it. All right, guys, here we are on the Tasty Trade trading platform and brokerage, my favorite for trading options. There's a link down below and benefits if you go through my link, so check that out. And let me tell you right up front, guys, I've got a little bit of a cough, so if I start coughing, I apologize. And I had the flu recently, and I've just got this lingering, annoying cough. One of the subscribers commented, get a new lung last week. I thought that was pretty funny. And yeah, I probably need one. But all right, let's jump into it. We will go. First thing I want to show you is where we are in the S&P. And here's the Fear and Greed Index. So CNN Fear and Greed Index, extreme fear right now. So that's when we want to be invested, and there's opportunities to buy. If you look, and it's all due to this government shutdown mainly, but over the last week, tech was down 4%. So, hey, that's when I buy a little bit more tech. Communication services, here we go, and consumer discretionary. Though, if you look year to date, everything's up. So, look at tech still up 24%. So, when we look at the S&P 500 going back to 2010, we're still outside the trend and way up. So we've got to keep that in mind too. So I still like to have cash on the side for a further pullback. All right, guys. First one we're going to cover, Adobe. You can look at the 5-year chart. Look how far it is down right now. It's trading at 326. 1-year target, 452 is what the analysts have it at. PE ratio 20 right now. I think is that the forward PE? Let's look. We'll go to stats page here. Forward PE of 15. That's unbelievable. And PEG of 1. Price to earnings to growth. If we go to the analysis tab, all this is free. You can get this right off Yahoo Finance. But look at the 4 straight quarters of beats, and then the 12% double-digit growth going forward. So Adobe, I really like. My target is about 470, so about a 35% upside. They've got 90% gross margins, $6.9 billion in net income. So they've got their Firefly product that's a catalyst, the Photoshop and Illustrators creators. This is really the best pro platform for creators. I know there's others out there as well, but these guys are dominant. And they've also got Document Cloud. They've had more than 10 straight double beats on EPS and revenue. So screaming buy for me right now. I've just got 2 put spreads on. So I've sold the 350 put and bought the 340. So I'm in the red right now on that down move. But if you go to the trade page, and then you can look at analysis, and you can see I've got to get up to 345, and then I'm profitable. But I'm not worried. It's going to get up above 400. So I'll just roll at about, we're at 41 days to expiration. I'll roll at about 15 to 20 days to expiration to the next month and collect additional premium. All right. Next one. Bitmine. How come it's not moving? That should be Bitmine. BMNR. BMNR. Weird. All right. So this is a fairly new stock. Bitmine Immersion Technologies. It's a pure play on Bitcoin mining, and infrastructure as well. They specialize in immersion cooling systems, and it's backed by Tom Lee. Unlike traditional miners, they just hold Bitcoin. They also build, own, and operate facilities. So they're all over this emerging technology. I guess that's why they've got immersion in their name. But I expect it to 2x or 3x over the next year. And the catalysts are expanding hosting partnerships with mid-sized miners, adopting immersion cooling, and rising institutional Bitcoin interest. So the fact that you can trade this on the regular stock market, this is BMNR. I'm gonna what do I've got on here? My 50/60. I was gonna sell. I don't know what I'm doing, but I'm gonna take that off. Right now, I've got 2 leaps and 2 calls against it. So poor man's covered call, and I'm just playing it long. But that's BMNR. All right, next one, Cheesecake. Love these guys. I've got a leaps option and a call against it, and then a put spread. So I'm definitely long Cake. It's trading at 15 times earnings. It's even got a 3% dividend yield. They're trading at 47 right now. If you look at Cheesecake, they've got a target of 59, the analysts do on Yahoo. I think it's going to be much higher than that. They've had huge beats on, you can see beat, consistent earnings growth going forward. So I really like Cheesecake, and I've got the put spreads and the leaps option. So Cake is a no-brainer for me right now. Next one, Celsius. Leaps option, poor man's covered call. You can tell I like poor man's covered calls. It's an efficient, capital-efficient way to go long and get premium, so profiting on both sides. Man, the more I'm fine if I don't talk, but if I talk, I just start coughing. Hopefully next video I'll be through this lingering cough. But Celsius is an energy drink. Free up storage. I guess I got to buy more storage. Celsius is the energy drink rocket ship. Revenue's up 65% year over year. They have a distribution deal with PepsiCo. The catalyst, they continue to eat market share from Monster and Red Bull. And their new product lines and protein drinks are really going to push them higher. They trade at 9 times sales, but it's a premium growth compounder. And the target that I have is double what it is right now, about 95. So I would do poor man's covered calls, and anything long. You can buy the stock. You can do a regular covered call, whatever you like. Let me know in the comments below. Are you using options, or are you buying stock outright? And are you selling short calls against it? Curious. I like the profit on both sides. All right, CRM, Salesforce. All these companies have strong balance sheets as well. You can go to the finance tab. You go right here on the left, and then finance. You can look at that annual income versus revenue versus net income, and assets versus liabilities, and just make sure that they're solid. Then you can look at the ratios, the margin, 77%, price to earnings, 34. Very fair for a software as a service, a SaaS company. But Salesforce is dominant. I've just got a leaps on right now because it had a big down move. So I closed out my call. So any update next week, I'll throw another short call on against it. And if we look at Salesforce 5-year chart, you can see it's down. It was just up at 370 back in 2024. But they are dominant. Forward PE 18, PEG of 1.13. Anything under 2 is great. 3 straight earnings beats. here's what you want to look at: the revenue and earnings continuing to go up, and growth 12%, double-digit growth. All right, next one, ELF. I just did a video on this, so check out my last video. But you can see it had a big pullback following earnings, 35% pullback, which was ridiculous. Yeah, they deserved a little bit of a pullback, but not 35%. So to me, screaming buy. They've got wait, what am I on? Why is it showing Salesforce? ELF, Yahoo Finance. There we go. 73. They've got a target of 124. Interesting. PE right now, it's on sale. 39. You know, they've acquired Rode, Haley Bieber's company, and but look at that, consistent revenue and earnings growth, 27% expected next year. So to me, ELF is a screaming buy. I've got 4 leaps and 2 calls. So I closed out a couple of them last week on the down move. So I'm just long. I'll sell calls on any up day going forward, but their revenue grew 70% year over year. Gross margins are still, even getting product from China and the tariffs, they're still like at 70%. The risk is slowdown in retail, but you know, most ladies aren't going to stop wearing makeup. So, and it's the inexpensive quality makeup that's in the $12 range. They've got a recent agreement and partnership with Sephora, so their products are in Sephora, which is huge. And then that Rode acquisition, they're expecting $200 million in revenue just from that next year. Haley Bieber's got a huge social TikTok following, so that's where ELF really excels. So I just did a video on ELF following earnings because it had a big pullback, 11% in one day, as well as supermicro. So check those out. HIMS, poor man's covered call, same thing. HIMS is 50% year over year revenue growth. They are quietly becoming the Netflix of personal wellness. So, yeah, I don't know what that means, but they're up big. And telehealth is big. You're able to get prescription drugs through telehealth, which they just make it easy to get drugs. So, let's see. You can see there's been that pullback. Their target's not nearly as high as mine, but long term, extremely bullish. This will be $100 than $200. Their marketing plan and business model setup with recurring revenue is excellent. So love these guys long term. If we look at the analysis, while they missed earnings last time, before that 3 beats. Growth 20% expected next year. Meta 621. They've got an 843 target, and yeah, a lot of people are saying 1,000 for Meta. So this is a screaming buy right now. Double-digit revenue, net income, and they just continually beat earnings. They missed this last time, and one of the issues, they've got double-digit growth, but one of the issues with Meta that people were concerned about on the earnings call was the CapEx spend. But Zuckerberg's going hard into AI spend, and he hasn't been wrong too many times before. So I wouldn't doubt him, and I think spending money on that, it's going to pay off. They've got huge cash flows and revenue as well. Their balance sheet and financials is incredible. There's their revenue, net income, balance sheets, super solid. They're also high margin, and they've got so many different business avenues. 82% margins. but they've got Facebook, Instagram, WhatsApp, Threads, and they've got 3 billion users monthly on Facebook, another 2 billion on Instagram and WhatsApp. Their cash flow exceeds $40 billion annually. PE's only 27. So yeah, huge screaming buy for Meta. I've got put credit spreads and poor man's covered calls. So I like to collect that monthly income. You can see on the pullback, I've already collected on these two options, $910. So we make money on the way down. It's eventually going to go up. I've still got 720 to collect as long as it stays below 750 before the 41 days are up. But then as it moves up, we make money on the leaps. So love the poor man's covered call. All right, Nike's the next one. I've got a put credit spread and a poor man's covered call. Nike is really turned things around. 5-year chart, you can see it's way down. They've got a target of $83.61 is where it's trading at right now. But they've also got a dividend, 2.62% dividend, which is nice with Nike. And I'm definitely a long-term bullish on Nike, trading at 23 times earnings. Revenues are steady around $51 billion. They're really pushing the direct-to-consumer right now. Jordan brand continues to outperform. Man, how much money has Michael Jordan made from Nike? I don't know, but unbelievable. But the risk is the China demand remains soft and competition from On and Lululemon is growing. Still, Nike's brand power and pipeline is unmatched. So they're going to continue to kill it. All right, next one, PayPal, screaming buy for me. You can look, it's been down, $83 target. They have, mine's above that. Let's see. If you look at the analysis page, 4 straight beats. What's there? They've got a fairly new CEO, and he seems to really know what he's doing. I think they're going to continue to crush earnings going forward. And solid buy. Let's look at what we have on. It's a fintech play. They've got a huge subscribers. I've got 2 leaps, poor man's covered calls in PayPal, but saying 11 times earnings on my notes, but I mean it changes as it moves around. But let's see what the PE is. But I know it's a buy right now. Yeah, that's right. I had 11 times, 11.89, unbelievable, and a 0.76 PEG ratio. So the new CEO is laser focused on cost reduction, AI-based fraud prevention, and reaccelerating Venmo monetization. And they're also boosting buybacks as well. The risk, fintech competition, Apple Pay, Stripe, and Block, but I think they're all going to be winners going forward. All right, ServiceNow, 861, target 1150. This CEO is on top of it as well. They continue to beat quarter after quarter and crush. They're using AI, one of the few companies that's not just talking about it, they're really monetizing it already. And it shows in their numbers. And you can look at this revenue and earnings beats continually. They just continue to execute 17% growth next year. So to me, this is a no-brainer. What do I have on? I think I've just got put credit spreads in ServiceNow. Where is it? Service. I'm blind. Oh, it's under now. There we go. Yeah, I just have a put credit spread on 900. So it's in the red right now. But yeah, I need to maybe look at buying more. It's expensive stock, but they're going to be there. I don't know when the split is, but they've got a split coming up. If anybody knows, put it in the comments on the date on that. But that will probably help the stock a little as well. It's a 5-to-1 or 10-to-1 split. Yeah, sorry about the cough, guys. All right, supermicro. I've got all kinds of things on. Look at that. 4, 1, 2, 3, 4, 5 deep in the money calls, leaps, and 2 calls against it. So with that big pullback in supermicro, I just bought more leaps. Normally when I buy leaps, I closed out all my short calls on the big move down, but when I put on and buy new poor man's cover calls, I always sell the call against it. So even though it's down, I still sell it, but I just closed out my calls on the other leaps. So super micro, super strong buy for me right now. So revenue growth is 40% year over year, and they guided for $40 billion next year, and it trades at 1.5 times sales. They did just not execute on the recent quarter, and that was the reason for the pullback, but there was nothing in there. I just did a video on it and dove into it in full detail, but take a look at that, and you'll see the full breakdown, but super long, super micro. All right, guys, this government shutdown is a gift, and stocks are on sale. It will end, and these stocks will go up. So be sure and like and subscribe down below. If you want to know the exact trades that I'm placing each week as they're placed, go ahead and join my free Discord through the link down below. And if you're serious about mastering options, there's an option trading mastery course link as well as a free workshop. So be sure and comment, ask a question. I answer everyone. And if you like this video, watch this next one.